for your business. So why switch it? There are 4 elements of switch it that is important that we believe would serve the sector. First of all, it serves as a mitigant against one point of failure because it renders the same service and with higher availability. It gives you potential to increase your revenues across all of your channels. It has customized support service. You're a different bank, you're a fintech, you have differentiated services. One approach of support does not fix it all. We understand your business based on what you do and the customers you serve, and your support system that will back the solution that is given to you is customized to meet all of your business needs. So those are the 4 major value that Switchit brings to the table. But embedded in Switchit also are the concerns of the industry that we know, or the sector that we know today. Switchit is able to deliver higher value and scalable throughput for your transactions. We had fraud protection for your transactions. You are sure that your transactions will go smoothly without any hitch because there's a fraud prevention and management system backed up in the Switchit platform. We have risk mitigation. All transactions that happen on Switchit are giving you capacity to do same-day settlement for all of your transactions. You have a robust and real-time reporting platform that gives you access and gives you control over your transactions. Then because of all of these embedded together, there is the fund management aspect of it that gives you flexibility to manage funds for your transactions and hands over power to you. So who needs Switchit today? I have a list here, but to be honest, if you are a forward-thinking organization, you want to win in the marketplace, you are looking at how to differentiate, where we know today that services have become fungible. The way to win in the space is to accelerate with speed and availability beyond just putting out easily replicable products. Then Switchit is what you should be looking at. But I have a list here regardless. So we have commercial banks. We have a couple of them running on the platform already. Microfinance banks, mobile money operators, digital banks, PSBs, fintechs, and merchant aggregators, and every fintech that has one solution or differentiation that you want to bring to the marketplace. Yeah, so like I said, Switchit is not new, it's operational. It's not something that you've not seen, that has not worked, it has worked. And we have recorded success rates. This is on a growth trajectory. eTransact as a pioneer switching company with interest and high capabilities is working continuously to grow the numbers to improve on service efficiency and availability. Right now what we have is 95% success rate on funds transfer. Yes, you heard me. Is 95% success rate on funds transfer. You have 98.8% success rate on airtime top-up and 99.5% on bills payment. To close, I would say that service in the fintech space is about speed, reliability, comfort, and being able to meet your customers' expectations. If that is what you're looking at, and that is what you're looking for, contact us. Thank you.
Thank you very much, Abimbola. So she spent 10 minutes, but she didn't go further. She didn't exceed the time, so I think she's deserving of a round of applause. She didn't give us any extras to take home. Yes, an ovation, please. So she was right on time. Think Switchit. Thank you so much. Now, ladies and gentlemen, we're moving on now to the next session, which is the keynote, on sustainable impact in fintech, e-government, and emerging technologies. And I'm really honored to invite for this keynote the MD InterSwitch Pure Pay, the MD at InterSwitch Pure Pay. Ladies and gentlemen, with a resounding applause, please make welcome Akeem Lawal.
Good morning. Thank you. Okay, let's try this one. Good morning. I'm really pleased to be here. I think the very first thing to say is just to congratulate the Fintech Association of Nigeria for another amazing conference. This is it's been a fantastic 3 days so far. But again, just to kind of acknowledge the fact that what this platform creates is an opportunity for partnerships, for innovation, for industry thought leadership. And so far over the 3 days, I think we've had some really amazing conversations. Congratulations to the Fintech NGR team and to the Nigerian Fintech Week. This morning, I want to talk about, in just about 10 minutes, some of the sustainable impacts, right, along the theme for the conference this year, looking at fintechs, e-government, and emerging technologies. And to start, I'm going to take us a little bit back down memory lane. Okay. So I'm going to start by taking us a little bit down memory lane. I'm going to look at what have been the impacts of fintech and the emerging technologies that have been introduced into the market over the last 20 years, right? We'll be looking at the impacts in terms of financial impact. I'll be looking at it in terms of social impact, economic impact, and then talk about how well have we done from an environment and how well are we living to the tenets of building sustainability into the businesses that we do, into the approaches that we take to business, and into how we engage with our environment and our communities, and indeed, in terms of building the sustainability that will create value over the next 20 years, right? And I'm going to end up with a charge to each and every one of us. There were less than 10 companies in the fintech space, right? And amongst all of them, I think they had received investment somewhere in the region of $5 million in Naira terms at that time. 20 years later, we have over 250 fintechs, right? And in just the last year alone, about 96 of them received investments of just over $400 million, right? Now, if you take all the 250 fintechs together, I think the value that has been created in terms of investment or value that these companies contributed to the Nigerian economy, the total value of all of the companies, I'm estimating at almost $8 billion, right, in terms of value that has been created by organizations that have created businesses over the last 20 years. 20 years ago, the number of jobs that has been created, or should I say livelihoods impacted, I would say is less than 200, right? 200 staff and entities who were working for tech or fintech related companies at the time. If you look at what's happened today, right, as at today, I think the fintech companies kind of employ in excess of 20,000 people, but that's nowhere near the number of lives or livelihoods that have been impacted. We are estimating that more than 2 million livelihoods have been impacted, and amongst those numbers, will be all of the agents who now have an opportunity to create value and wealth that they can use to support their families. Includes those who've been able to, enabled to take their e-commerce or internet businesses on Instagram and create value for their families as well, right? Again, 20 years ago, the businesses were serving only about 150,000. How many businesses were impacted or served? These are companies who have received value from the fintechs themselves. Today, over 530,000 companies, small, medium businesses, including large organizations, have been receiving value from these organizations. E-government didn't exist 20 years ago, but I'm aware of government payments across all the state governments, federal government parastatals, state government parastatals. And then just some thinking about the statistics in terms of volumes. But probably most important for me is where Nigeria is on the global map, right? 20 years ago, Nigeria was not seen as a tech nation. We're not recognized as anywhere in front of digital technology. We're seen specifically as a backward organization. 20 years later, we're now recognized globally as one of the top tech nations across the world, and not just in Africa. So that's what we've done. The question is, what are we going to do into the future, right? As a fintech business, and I know a number of you here are, most of our priorities are around what's our revenue, what's our valuation, how are we growing it, right? Should those be the only thoughts? Should we begin to think more about what kind of sustainable impact will we leave over the next 20 years, right? And I know there are a number of challenges, and the next panel is going to talk about some of those, right? When you look at, first of all, competition, right? The competitive environment has changed significantly, right? You have fintechs, you have neobanks, you have financial institutions, you have everyone who is playing, including big tech coming into the environment. The nature of the competition is becoming so intense, but should we be doing competition in a manner that we forget the ability to create sustainable businesses that will survive into the next 20 years? We've looked at business models as well. I mean, for the last few years, we've seen an acceleration of growth followed by investments that have come into the market. As those investments begin to slow down because of the global economic environment, behaviors are changing in terms of business models, right? People are driving more towards creating sustainable businesses. Profitability is becoming a key concern. How are you doing that and still thinking about the next 20 years and building a business that will be sustainable into the future? What about talent? Probably number one of any business or CEO today, right? You're losing talent to competition, you're losing talent to migration. How are you refilling that talent pool, right? Most organizations are just trying to pay bigger salaries to attract the next the most competent talent. Should we be thinking about how do we refill the talent pool and rebuild the talent population so that we will have, again, sustainability as we go into the future in our businesses? What about the technologies that have been said will disrupt the future, right? I've picked two of them, big data and artificial intelligence, blockchain and crypto, right? Fantastic technologies, likely to transform almost every industry in which they will touch. But are we thinking about how those are going to be deployed locally or internationally? Are we going to be consumers of those technologies, or are we going to be producers, creating value for the continent and for the future generations of Nigerians and Africans? What are we doing to build the capabilities and the talent in Nigeria or in Africa that will build the solutions that will solve the problems that exist for us? Because again, like we've learned over the last 20 years, those solutions are not going to come from foreign organizations, they're going to come from us. And we will not get those solutions if we do not build the talent pool ourselves. What about the next 20 years? What are we going to do in terms of e-government? What kind of sustainable impacts are we going to create? What kind of sustainable impacts are we going to create for the environment, right? These are some of the questions that I think, as we go into the sessions today, and I know there are two panels that are going to discuss sustainability, are really important questions and comments to ask. So my charge, which is my last slide really, is as we think about the next 20 years, right? Yes, we must think about financial impact. How do we create value for our investors? We must think about valuation, right? But we must also think about our social impact. we must also think about our economic impact. We must also think about developmental impact, right? And we must also think about the sustainability of our businesses as we go into the next 20 years. Thank you very much.
So if you look to the back, you see that it's right on time. So please, ladies and gentlemen, a standing ovation for Akeem Lawal, MD, InterSwitch Pure Pay. A round of applause for him. Thank you very much. So, I mean, from where I was sitting, I saw that what he did in his presentation in such a short time was to take us down memory lane to 20 years ago when there were just a few companies in the fintech space to where we are today, and then looking to the future. So thank you so much for such an efficient use of time, to take us to the past, the present, and then as we navigate towards the future. As you rightly mentioned, ladies and gentlemen, we're moving into a panel discussion now that would focus on the challenges in Nigeria fintech ecosystem. So this panel is going to be focused on challenges in the Nigeria fintech ecosystem, and it's going to be one that is open for discussion. If you have questions, please note them down now. Now is a good time to note them down. And also as the conference proceeds, as a view to creating solutions. So we are co-creating solutions, and we want you to be a part of it. So please, I enjoin you to sit back, relax, and be involved in this panel discussion. Same goes for our virtual audience who are joining in virtually using the comment box on the Zoom application. Please drop in your questions, your comments as the session progresses. Now to the panelists and the moderator. Now this panel, as I mentioned, is focused on Fintech Industry Forum. It's a Fintech Industry Forum that's going to be looking at a dissection of challenges in the ecosystem. And the first panelist I'd like to invite is Deremi Atonda, MD Remitel. A round of applause for Deremi Atonda. Thank you. We've got Kofo Arowolo, MD Woven Finance. A round of applause. We've got Oluwakomu, CEO Opay. Please, a round of applause. Thank you. You're welcome. We've also got Ajibade Laolu Adewale, Group Head Partnerships, Digital Solutions and Fintech at Wema Bank. A round of applause. Joining us virtually, we have Aitwa Scholar Oladejo, Executive Director at FSI. A round of applause. Now, to moderate this panel, I'd like to hand over the microphone to Inchedo Lisa. She's the Associate Manager of Fintech at Steer Business. I'm talking about Inchedo Lisa Anama. A round of applause for her as I hand over this baton to her to moderate this conversation.
Working? Sorry, is this working? Can you hear me well from the back? All right, thank you. My name is Inchedo Lisa, like was introduced as, and I work at Steers Business. I work at Steers. Some of you may or may not know too much about Steers, but Steers is a data intelligence startup, and we're all about just solving the information problem in Africa, like the first speaker was talking about. So before I go ahead, I think there's something that struck me walking into the room, and I do want to just mention it and say a big shout out to the FinTech NGR crew. And I think once I saw that there was someone doing signing, the first thing that hit me was that, wow, you guys not only talk inclusion, but you're actually walking the walk. So congratulations, and that was really remarkable. All right, so we have an interesting job today, in that our focus today is the way we're going to know that we've done a good job and we've had a good conversation is being able to dissect the challenges within our very dynamic ecosystem. So my job as a fintech, as overseeing the fintech practice, is really to be a cheerleader for this industry. But I think one thing that I want to know that we did very well today is leave people not just with solutions, but better ways to think about the actual problems. I'm not hoping for the solutions to come out of this room or this conversation, but I'm hoping that if we change the way you think about the problems, maybe perhaps, we can get closer to finding some solutions. So there are going to be three major problem areas that we're going to talk through. We're going to talk about the challenges with scaling as a fintech, getting closer to moving away from just pure revenue to profitability. We're going to talk about the battle for talent. And then lastly, we're going to talk about things around corporate governance, given all that we're seeing on social media and all of that. But to start off, we're talking about scaling. I'd love for us to take a look at basically, when we think about scaling, I like to think about scaling on two sides, scaling your customers and then scaling your supply. So to start us off today, I wanted to throw a question open. To Mr. Jibade, I'd love to ask a question around when we think about growing your customer base. The other day, something dropped in my mailbox. It was like a report from McKinsey. And you get all these reports and you tell yourself you read it, you never get around to, but among the first few lines, one of the things I picked up on was, there was a stat that said that in Africa, African consumers, if you compare them to maybe consumers in Latin America, it's about 4 times harder to monetize an African consumer. And then if you do the comparison with the consumer in the European Union, it's about 13 times harder to monetize an African consumer. The natural answers to this question is, Africans have smaller pockets, right? And so the first question I wanted to ask is it just about small pockets? Mr. Jebade, is it just about small pockets? What are the other factors that may likely be causing it to be so hard to monetize an African consumer?
Hello. Thank you, Lisa. Well, I don't know where you got that statistics from, and it can appear to be correct. Because most times when we are trying to digitize a journey or find solutions to problems, we don't find solutions, we don't look for the problems. But and that seems to speak to some of the challenges of fintech. Everybody is going into a very saturated market. When the other speaker, when Damilola from SoftPay was talking, he spoke about the other opportunities, and he showed a graph of what has been done. Payments and digital payments and new banks have actually scaled, and it seems that that's where everybody is focusing on. But there are some emerging technologies that we can look at and see how we can solve the problems there. There's a small company called, maybe I should hide their names. Their focus is on transportation and trying to solve the problems of transportation, from when you board a vehicle to when you get to your destination to when you pay the driver and when you get the fulfillment for the journey. So I think one of the problems that we have has been the problem of identifying what problems to be solved, and if you can solve that problem, we will see traction. So I agree with you, but it's in the sense that we're not solving the problems that should be solved. There are problems around insurance or capital market. When the other gentleman who represented the DG of security was talking, he mentioned the figures in terms of payment that has happened throughout the year, but just a percentage of it came into the capital market. Somebody should look at that and go and solve that problem, and then we see the traction we are looking for. Yeah, that will be all.
Thank you. Yeah, those are interesting comments because, like you pointed out, the map was very rightly showed there were so many verticals that were yet unexplored. And I think one of the quotes that he put up, which was interesting, has something to do with smoke and fire. And it's true that there's no smoke without fire. And so the question is, and I'm going to just throw it up open for whoever wants to take the first stab at this, is we have acknowledged that mostly a lot of the innovation within payments is really largely concentrated. A lot of the innovation within fintech, I should say rather, is really very concentrated within very few verticals, payments being the top one of them. And we'd like to know that. I'm sure it's not just a lack of acknowledgement that there are other verticals to explore. So what is it actually? What are some of the factors that may be limiting people wanting to innovate in other fintech verticals, and just having so many people doing so much in payments alone. I don't know if there's anyone in particular that wants to go at this one.
I can take this. Hello. I think we need to talk about context first, right? When we look at Nigeria, we have a population of about 440 million. Africa is about 1.3 trillion. So Nigeria is about 20% of Africa. So it is a viable market. When we look at the revenue that can be derived, which is through the consumers, you alluded to the fact that in Nigeria, the personal expenditure consumption, or across Africa, is about 1,500. In Latin America, it's about 5,000. And in Northern America, it's about 49,000. So what we see there is disposable income and the revenue that can be derived from Africa, and then you distill it down to Nigeria, there's a challenge there. What that means is that we need to be very, very focused about creating value-based products. Ajibade alluded to that, right? There's the fintech industry, there's payments, which is arguably saturated, but there's still a lot of value to be derived because there's still friction in this market. But beyond payments, there's obviously lendtechs, redtechs, insurtechs, crypto, and the likes. The thing is, it is still a nascent industry. So what that means is somebody has to do a lot of the heavy lifting. When you see other people in the market that have tapped in and identified an opportunity and demonstrated that there's value to be derived, it makes it easier for other people to enter that market. But naturally, if someone is going to enter this greenfield terrain, that means there's a lot of work that needs to be done to derive value. And it's not always first mover's advantage that win. Sometimes you can learn from that first mover, and the second mover can win based on the knowledge derived from that first mover. So in a nutshell, data is a problem in Nigeria as well. So being that first mover, to take that high level of risk, it requires a level of comfort, and it requires the necessary capital funding as well. Some of that is being solved by some foreign firms that have tapped into some value and see that that can also be distilled into the Nigerian market. But of course, it's up to us to support ourselves, local funding, to invest in these smaller fintechs that are tapping into some problems that need to be solved in Nigeria in moving us forward as a country.
So I think a good summary of that would essentially be, hey, even within the payment space that looks saturated, there's still so much more value. And we can tell that because there's still so much more friction even within payments itself.
Absolutely. According to McKinsey, I think in 2020, the fintech revenue industry was about 4 to 6 billion. And by 2025, it will be 30 billion. So that just sort of shows the value and the potential that we have across Africa.
And so I think just to write off of what Kofo just rightly said, the question then comes is, even as there's value still within payments that we've not yet tapped into, but concentration does have implications for profitability nonetheless, right? And so that's another, I'm voicing this out as a thought, so that's another issue that fintechs are going to think about, like profitability, as we get even though we're tapping more value, but we're getting increasingly concentrated, and so it's hitting your impact on profitability. So that's a thought I'm going to come back to. But I did want to make sure that if there was additional comments on this question, I do want to...
Yeah, thank you, Chair. Just picking up from the last two contributions, to start from there, I think the first thing in terms of solving the problem of scaling and profitability, one of the big issues, I want to echo a tweet of one of our fintech gentlemen, Charles Dairo. In one tweet some weeks back, he said something like, is your product a painkiller or a vitamin? I think it's a very perfect analogy. If your product is a vitamin, a nice to have, when you're not solving a really big problem, it's unlikely that you are going to scale. If you are solving a really big problem in terms of a painkiller, that's the foundation of scaling and perhaps even the challenge of long-term profitability. But speaking to a couple of the issues around the profitability of the African consumer, why it could be a particular challenge. For example, in Nigeria, The first thing from our business, from our business at OP, are things like the cost of access. In an offline business, that's a major component of our business, for example, where we deploy POS terminals. These are dollar-based costs. A POS terminal at $60, $70 implies that if all the merchant acquiring solutions in Nigeria are going to be strictly based on this kind of $60, $70 solution, it will limit the kind of addressable market we can reach in terms of profitability for all of us who are involved in merchant acquiring. So if we're going to solve and scale the merchant acquiring business in Nigeria market, how do we get the MSMEs where the cost of acquisition, the cost of access to those markets are much lower in tandem with the kind of revenue opportunities of those kind of MSME, for example. The second thing, of course, is infrastructure and ecosystem. Our e-commerce players have learned the hard way that they have to build logistics along with their business. These are additional costs. If they were running, for example, in Europe, they would not have had to do such investment. Infrastructure costs also in terms of payments on our business, we've seen in terms of things like higher KYC, higher compliance, and higher risk management costs. In a country where only 40% or 30% of our people have formal digital identity. Digital identity is the foundation stack for credible and trustworthy payments. When we do not have it, it means KYC costs, compliance costs, risk management costs are much higher here compared to Europe. The other things are things like the geographic disparity of Nigeria. Lagos is not Nigeria. The ecosystem complements that you have in Lagos is not what you have up country. So as you move out of Lagos, the cost of some of the things you want to do, business cost of acquisition begins to get higher. The other thing, particularly for, and speaking to, we know a lot of people are online, addressing the mindset and the dichotomy that valuation and profitability are mutually exclusive. If there's a lesson we should learn over the last 1 year, particularly, is that building a path to profitability, even when we are building valuation and scale, getting our unit economics right at customer level and at product level is very fundamental into building a valuation that will last and be sustainable. These are some of the things, those kind of mindset issues that I just want to acquire and scale. Scaling for what? Is there a path to profit in the business that you are scaling for? I think those are some of the issues that we should, that touches on profitability and scaling, for example, in terms of peculiar issues in our local ecosystem in Nigeria. Thank you.
Thank you. Right. Thank you so much for what you've shared.
Maybe if I could just quickly add to that.
Yeah, sure.
And taking on from where Olu stopped, the opportunities are endless, but it's addressed the issues around why aren't we going for those opportunities? The environment of risk, that's one. You want to be in safe harbors and do what others have done, but like you said, concentration therefore challenges profitability. But the honest truth, though, is the opportunities here are still elastic, like Ofo said. Just think about it. Okada business, right? As concentrated as you think it is, what they are pushing for is the last mile consistently. Bring that into payment. You begin to see that there are many things you can do around that. And just from ferrying people, they ferry goods, they become courier companies. The same thing happens once you're talking about the flow of funds. You just see that so many things are around it. So talking about scaling, the first thing is the mindset with which you start off. Then awareness of your environment and the opportunities. And one good thing we've seen recently is, since we're talking about the industry, we need to be responsible for ourselves and to ourselves. And kudos to the guys who championed the startup bill, because that's about recognizing this environment. And so we need to do a lot more for ourselves. Collaboration is the next thing. Olu just mentioned the cost of acquiring devices, $60, $70. Think about that value chain. And if everyone in there were going to be part of putting a system in place where you have someone who's producing that right here, Even if you're taking $5 off it, everybody benefits. So the issue about profit, keep trying to reduce costs. But then you talk about the environment of increasing inflation. And that's another thing we need to speak to. For too long, everybody keeps looking at the cost of transactions without looking at the cost of making transactions happen. So while the cost in the operating environment is going up, everybody keeps saying transactions should be free. Sitting on what environment? So I think we need to speak to that as well, since we're speaking for the industry. So advocacy is a platform that must bind us to speak to common issues, to look to extending opportunities. You can't grab it all. And that's one of the things we're beginning to do. Ecosystem play is going to continue to be critical. Ecosystem play, you see an opportunity, you want to sit on it alone, the cost of doing it alone can be very massive. Then you want to reinvent the wheel. What someone has done, you want to reproduce that. You're not creating value. Why don't you leverage on what someone has done? And that's ecosystem play. And now we're all in the API game. If someone is already doing it, and you plug in, the costs are going to get lower, everybody benefits, margins can grow up without actually pulling environmental levers. And when I talk about looking at the value chain and what you can do, just think about data. You were quoting McKinsey. Who's the authority for fintech data in Nigeria? Stays, right? I don't know, I'm just joking. But just think about it. And Oluwade also alluded to that about data. One of the things we did, you're in payments. What are people getting paid for? And you mentioned credit, access to credit, digital identity. Everybody forgets that every footprint are plugged into us, and the only thing they're looking at is the value of these people. How do they get paid? What do they get paid? And you begin to see, so the cost of lending gets increasingly lower. A lot more people are going to get attracted to that, and that's about creating value. Thank you.
Thank you. These are all very valuable. These are all very valuable thoughts. I want to turn it over to Aitwas to get her input as well. But before I do that, I just want to do a quick recap, because I think a lot of value has come from just a small part of our conversation. Yeah, just a small part of our conversation. One of the things that I'm taking away, and I think this is necessary for any fintech operator in the room, is when you're thinking about scaling, you have to think about how am I going to balance the cost of operating with the money that I'm going to get in. What are the things that can drive up your costs as a fintech? One of business, right? And then other things is just like geographical disparity, and the fact that a lot of the expenses we're making, because we're not an industrialized, we're not an economy that produces what it consumes. A lot of the expenses fintechs need to make are going to be dollar-based, and that's basically around Keep quiet. So I want to come back to this cost of data. Like, what is going on? Why do we have this gap for fintech? But I do want to turn it over to.
All right, thank you very much. And a lot of interesting thoughts have been shared. However, I'd like to look at it from two perspectives. The first one is ecosystem development. I'm an advocate for ecosystem development, and I think that's what I've been doing in the last 3 years. A lot of things are happening in silos, and when that continues, the cost of service to the end user will still be very high. My personal experience, I couldn't get to an ATM. I hope you can hear me.
Yes, very well, loud and clear.
Okay, so I was in a location and there was no ATM and I needed cash to do that transaction. So I walked up to one of the POS agents and I tried to withdraw from that POS agent. And she said, how much do you want to withdraw? I said 20,000. I said 500 naira. Of course, that's what is obtainable today. I was taken aback. The cost of service is still very high. I think that there is room to create more innovative solutions. I don't think that for us to scale, POS is the only solution to withdraw cash apart from ATM, to transact, to do business. I think that there are services you can put in the hands of merchants that are lower than the cost of POS. We know that our economy is highly dependent on dollars. And so it keeps driving that cost up. We have an industry innovation sandbox today, and we see a lot of people come up with genuine ideas on how to drive payments. However, they need to collaborate with incumbents. And in collaborating with incumbents, some incumbents are selective in what they will collaborate with and what they will collaborate on. I think that if we have a system and a structure as an ecosystem, right, to harness these products or to harness these ideas and drive them across the value chain, there will be immense value. The second thing I will talk about is the willingness to pay. So you offer a service, and Athena's data, which most of us rely on in the financial service industry, have shown that some customers complain about costs, or they don't even have any form of income. And of course, if you don't have a form of income, there's no how you can even want to participate. The third thing I will talk about is what the MD of Open Finance mentioned, creating value. If you create something that resonates with my life, that resonates with my culture, that resonates with my sentiments, something I cannot do without, definitely I would want to use that service. My willingness to pay is how you delight me and how much I can afford to pay for that service. These are some of the points I think that we need to be discussing. How do we democratize innovation, for instance? How do we make innovation in Nigeria second to none? How can we create a unified platform for early founders, for young startups to do stuff? These startups want to coexist with the incumbents. Yeah, they want to collaborate, but they also want to coexist. Coexist in the sense that they want to have their own identity. They don't want to be swallowed up. How do we create that kind of platform for this to thrive? And then some of these challenges around demand. The success story in FSI today is when we started, of course, we're trying to grow our community. Today we have about 6,000 innovators in 3 years. What we did was to work with incumbent players. We worked with the existing partners. For instance, we worked with a developer community, right? And the first events we had, our community grew from 100 to 1,000 plus. So that's one way to even scale in terms of services. So those are my few thoughts for now. Thank you.
Yeah, thank you, Aitwaz. I think one of the big summaries I take from that is basically one of the challenges to scaling is not having enough ecosystem platforms where people are exchanging thoughts, also sharing stories and mistakes, and how we can collaborate to find better solutions and not repeat the same mistakes. Thank you so much for that, Aitwaz. I do want to give it over to you, Mr. Ajibade. I think you had a thought on this.
Thank you, Lisa. If you are following all the speakers, we have all said almost about the same thing. We understand the challenges, and I want to say congratulations to all the startups in this room, because last week, the federal government just passed into law the startup. It was the bill before, it's now the act. The Startup Act speaks to the challenges startups are facing, from government policies to regulatory bottleneck to high cost of doing business, access to funding. And then it addresses the gap between government and startup and their operating costs distribution as well, infrastructure that Mr. Oluwakomo of OPE spoke to. So the Nigeria, we are moving in the right direction, that's what I want to say. And that same policy is now left for us to harness and drive it to ensure that it's working properly. What we have done in Wema Bank is to create a partnership desk that provides distribution, infrastructure, and wholesale banking to potential partners like startups. Now, the wholesale banking is not your typical retail banking or commercial banking or corporate banking. It is wholesale in terms of we understand your business and the cycle of your money. You are not a settlement bank, and then we are a bank, but we can avail to you some credit facility as such, not a credit facility, because we understand the cycle of your settlement scheme. So you can have access to your money even before your money comes in. And I think that's a step in the right direction.
Right. Thank you so much for that addition. I think one thing I want to pick back on and double back on is we've not listed a number of challenges to scaling, to increasing rapid customer growth as fintechs. One of the challenges I did want to drill down on is the challenge of data, and basically the challenge of not having available data in order to make your decisions, coming in newly into the ecosystem, or even sustain your business. One of the questions you asked, it was a rhetorical question. Data now, it can either come from public, it can come from private. If you look at America, you have public services that provide data, and then you have private services that come in. Now we can't wait on public, we just can't, because fintechs need to grow. And so the bank for data for fintechs.
Well, I think that goes back to the issue of advocacy I mentioned earlier. As an industry, we must know the things that drive the industry. and we must go all out for them. And we're so fortunate that the central bank's disposition over the nobody's analyzing. And that's a value point, just talking about opportunities and extending them. So just imagine the number of fintechs who are getting to be regulated. All of us send data to the CBN, and so what next? What next? Imagine someone steps in there and says, for the industry, we're going to be processing and analyzing this data. We talked about geographical distribution. Today in Nigeria, we know about the cost of fuel distribution and why we have what is called the bridging cost, if fuel is going to go to this part of the country. If you're going to extend financial services to some part of the country, what's the minimum cost? Who's going to interpret that? You can only see your own cost, so responsibility. And I'm thinking as an industry, we can write that and agree amongst ourselves. We think this is important. In fact, we want to sponsor a startup to take that on because that becomes available to everybody. It's a data pool. It's big data. We're monitoring consumer behavior. Like I mentioned earlier, the kind of thing we're doing today, it's just amazing. There are people who have worked in different places for a number of years. They're still finding it difficult to have access to credit. Why? Because their data is not digitalized. They still go to many places and they're asking for paper evidence. And you're just making this available on USSD to a swath of providers. So from transactional data to analysis of data to sharing of data, then that gives insight. And so that also says the collaboration is not just within us, within the industry, it also extends to government to...
One of the practical problem of, phone number, or this name, Paul, is someone who's don't have a data bank that can tell a fintech that. And so that's useful. Before I continue, I did want to ask, is there anyone in the audience at this point in time that has a question, like a burning question you want to ask at this point in time? I definitely don't want to leave you out of the conversation. Yes, the lady in the red.
Good morning, everybody. My name is Titi Layo Aino Scott. I'm a technology and innovation lawyer. I've listened to the panel and the problem. I visited the exhibition stand yesterday and I had some solutions that I would actually need for my own business, but I had never heard about them before. How do we solve that challenge of getting the products to the consumers? I know that putting up billboards like the CUDA and all that may be expensive, but there has to be some way to get people to know some of these solutions and be able to use them. So that's my own contribution. Thank you.
Thank you. So your question is around how is there a way for us to extend reach so that...
So, yes, it's a big problem. Most times you have to source for information yourself, but some organizations like FSI, that's iTwice, that I spoke earlier on online, they are doing things around collating tech, and every tech that is available. Like, there's no particularly known avenue to go and find out where this person is. But you and I, we are hustling. We are trying to, of how terrible it was then. The fintech that we celebrate today, some people were trying hard to build it that time, but today we are happy. And we are here today with the newly signed startup bill of Startup Act that was signed last week. If we all jointly come together and see how we can actualize that bill, at least we'll force something good out of government. Thank you.
Thank you. Thank you.
Let me speak to some of the earlier issues around some centralized data. How we cannot complement ourselves, and speak to our fintechs who are into credit. Today, the fintechs who are into credit are not mandated to submit their data by regulation to the credit bureau, unlike the banks. Meanwhile, the new generations of customers that are being served by these fintechs are those who have been traditionally excluded by banks. So it implies that these new fintechs who are into lending, they are building a new set of data on customers whose data, whose credit story, credit history, no one had known until now. Unfortunately, they are keeping this valuable knowledge to themselves. the total ecosystem will benefit if this new generation of data is also put into the credit bureau system so that we can all collectively as an ecosystem manage down the cost of risk. Because if I do not know, the same customer is going to different A, B, C fintech, and each of them will treat the customer in isolation. Meanwhile, there will have been some data of credit history somewhere that could have helped to assess the risk much better, and also price the risk much better, and even give a better interest rate that's affordable, for example, and get many more people to access credit. So these are some of the things that we are here that we can all do together for the benefit. Throw it in now. Is on digital identity. As of today, there are 90 million, according to NIMC, national with NIM, National Identity Management Register. This is a big news. At the rate at which NIM has grown over the last 4 years, it implies that we will have 100 million Nigerians with formal digital identity by 2023. This is it has big implications for us in fintech. What it means is that for the first time, we have the possibility of having 100 million Nigerians with formal identity and formal bank account or wallet. That changes a lot of things. It expands the market, it expands reach, it expands inclusion, it makes credit, lending, payment, all sort of services to scale in different dimensions. Because a lot of us are listening online, I want to throw a challenge to all of us. What are we going to do as patriotic Nigerians to convert 100 million Nigerians with digital identity to formal bank accounts by 2023 and change radically the pool, depth, and reach of the fintech ecosystem in Nigeria? If we solve that, we'll also be addressing the issue of valuation for valuation's sake or valuation for social impact, where every Nigerian can feel that fintech has actually touched them and we've included them in the opportunities of the former financial system. Thank you.
Thank you. Very, very valid points. Yeah. So I think you've made a very valid point, and I think nothing screams scale as well as that number, 100 million by 2023. And so the question, what I'm hearing is that digital identity is like, it has a leg up being solved because we're seeing the work. With NIN, we're seeing everybody, like your phone, you can't call certain people unless you get registered for INN. We see the work being there on the digital identity front. Now, the other bit of data that the work is now not being done as fast is data on credit behavior, and especially data on credit behavior that fintechs have, that fintechs are keeping. And so the question is, we're clapping for the 100 million that we're going to get, but if we don't have the right data on them, or we don't have the habit of collecting and sharing data, how the money back? You don't make money by sharing money. And so the question is, there's something that's clear here. There's a hesitance to share data. Because we're all aware we do need it, but there's a hesitance to share data. And so can we talk a bit about, so before we go ahead and talk a bit about how can we solve for that hesitance that people naturally have? How can we deal with the hesitance? I do want to turn it to see if Aitwaz had any input at this point in time. I don't know if she's still there.
Concerning data, I agree, the two speakers that have spoken, Mr. Olu and Mr. Ajibade, that there's a need to harness the existing data that we currently have. However, beyond harnessing the existing data that we have, we also need to do the dirty work. So what do I mean by that? There's this African Development Bank story. They were looking at how to address the gender gap, financial inclusion gender gap across Africa. And a case in point is the Zambia story. 80% of farm holders were female, contributing to food, contributing to food supply in Zambia. However, they were not financially included. What Kula did in providing agricultural insurance was to get closer to them to understand their pain points. So they put all of that data together as primary research, and they discovered, and they tied that to the pain points of these people. They discovered that during some harsh weather conditions, maybe flooding and all of that, their crops are eroded. And so they created a solution, a product to solve that problem. Somebody in the audience talked about awareness. I agree with her absolutely. There's a lower level of awareness on our products that are best suited. I think is very, very important for the ecosystem to grow. But I also dare say that I think that some willing to share what they have. If you even look at the ecosystem, I may be wrong, but my opinion is this. When any service is launched, right, maybe from the central bank, for instance, or even from the Nigerian bank settlement system needs, the first point of call are the traditional banks, and then they forget that they are fintechs, and they also, maybe not deliberately, right, maybe just to test it out first, that they are fintechs, and they're even microfinance institutions. I'm not an advocate for everyone in the ecosystem who has a great idea or who is doing stuff or who is solving a problem to go and get a license. But I think that they may even have some information about certain markets. The transportation sector, for instance, Lagos alone, look at the value chain in Lagos, the transportation sector. That's a number of startups trying to do. Since must be championed, right, with this tax to say, okay, how can we harness this data? If you look at BVN data, 50 million. And I also do not think that everybody needs to have a bank account. I think they need to have a financial account, a transaction account. What I hear from people at the bottom of the pyramid is, oh, when you pay 2,000 in my account, you pay 1,000 in my account, the bank deducts 50 naira. That 50 naira is stamp duty. To you and I, it may not matter, but it matters to those people because every naira they have, every kobo they have counts. So I think that when we look at financial inclusion broadly again, we should be looking at accounts that CBN can recognize, wallets can have, are not harnessing the benefits, which will likely speak to those who are on banks. We have to also be thinking of data